Greetings and welcome to the third episode of the RIMS Bermuda 2020 webinar series presented by RIMS and the Bermuda Business Development Agency. This session is titled, What Next for ILS and Alternative Capital? This session will be hosted by Jasmine DeSilva, the Business Development Manager of Risk and Insurance Solutions for the BDA, and she will be joined by an esteemed panel whom she will introduce shortly. I am Justin Smullison, Business Content Manager at RIMS, the Risk and Insurance Management Society. A few notes before we begin. If you have a question for our presenters during today's session, please submit them by writing in the question box and not the chat box. Feel free to ask at any point in the presentation. We will reserve time at the end for Q&A. Jasmine and moderator Kathleen Faries will moderate that segment. Following this session, the recording will be available on Opus Ed and Risk Knowledge, the RIMS online content library. That'll happen in about one business week. Or within one business week. All downloads and related contact information will be accessible to the sponsor. And on to today's session. ILS and alternative capital growth is expected to continue. This installment of the RIMS Bermuda webinar series will present insight from industry experts as they discuss the increasingly sophisticated needs of investors and issuers, the expansion of the market, and how Bermuda is adapting to remain at the forefront of the market. RIMS and the Bermuda Business Development Agency are thrilled to be joined by a large global audience. Welcome, everyone. BDA Business Development Manager Jasmine DeSilva will introduce our panelists and begin the discussion.
Thank you, Justin, and good afternoon, everyone. I'm delighted to welcome you all to the third episode of the RIMS Bermuda webinar series. As you will know by now, this series is all about putting the spotlight on the key issues and trends currently shaping the risk management landscape and Bermuda's unique role in addressing them. This week, we are discussing insurance-linked securities, also known as ILS. ILS continues to grow in terms of coverage and risk types, and has also been deemed ESG compliant. As the leading ILS domicile and a center of excellence and innovation, Bermuda is well positioned and placed to support and accelerate the current momentum in the global ILS sector. Today, we have joining us Kathleen Faries. She's the chair of ILS Bermuda. Kathleen is the expert when it comes to ILS in Bermuda, so we are all in great hands. Brad Adderley, he is a partner with the global law firm Appleby. Brad has extensive experience in insurance and reinsurance market and specializes in ILS and alternative collateralized reinsurance investment transactions. Last but certainly not least, Perez. He is the CEO of Horseshoe Group. Andre, the founder of Horseshoe Group, has over 25 years of experience in insurance, reinsurance, and alternative risk transfer. Thank you to all the panelists today. And without further ado, I will now hand it over to Kathleen.
Thank you, Jasmine, and good afternoon, everybody. Welcome. And we first wanted to, on behalf of the panel, thank RIMS and the BDA for giving us this opportunity to bring this ILS discussion to you. I think the backdrop to this discussion is probably as interesting as it's ever been in my career, certainly, which is a few years now, similar to Andre. But in the last few years, just again, kind of to give you that backdrop, in the last few years, we've had quite a few actually significant US and even Japanese cat losses. We certainly have seen as a result of those losses, what I would call maybe a maturing of the market with regard to the uncertainty around cat losses, maybe even a little bit of a maturing around trapped collateral and how the asset class is managing trapped collateral, valuations, and certainly a discussion and a maturing around the concept of return on risk. So how much return are we getting for the risks that we're taking? And of course, climate change is going to continue to be a part of that discussion. So we then had all of that, but then we topped everything with a global pandemic, which is something that is going to be a conversation and be impacting the broader market now for some time to come, with again some uncertainty. So with that incredibly interesting backdrop, I'm so delighted to have an opportunity to talk to Andre and Brad, because they both have really a broad reach and perspective on the market because of the business that they do. And then they also have been instrumental in really building the ILS Bermuda market and expanding that market over the last 10 years. So two really great guys to talk to when we've got such interesting things going on. So with that, what I thought we'd do is maybe start on the macro level. There certainly has been some discussion in the press and the industry press around rising rates. You know, are we in a hardening market? Are we not in a hardening market? Capital constraints. We've had some equity raises, which we haven't seen for a while. So really interesting time. So Brad, we would love to hear what you're seeing in terms of the broader market conditions and what you're hearing from your clients and investors, et cetera.
Sure. Hi, everyone. I'd first like to say thank you to Jasmine and Kathleen, because it's been a while since I've worn a collared shirt. So I feel like a big boy today wearing a proper shirt today. So thank you all. I think the backdrop is there was people in the insurance marketplace questioning whether we're ever going to have traditional hard market again. There's a lot of talk about what would it take to get us back to a hard market? What kind of losses? What's the economics look like? What has to occur? Because clearly for the last 10 years, there have been declining rates. Well, if we set the scene, I think most people will agree that come January 1, 2020 renewals that we just had, they had hardening of markets, hardening of rates, hardening of terms. The previous interviewers and previous articles we've seen in the last 6 months up to today have all talked about it being even more robust. That with the advent of the early losses of this year, with the advent of the pandemic, with the advent of the economic downturn, the lack of investment returns, rates have increased 20%, if not more. I tell you an interesting story. I was doing a board call last week with an insurance client of mine, and they were all saying, when was the last time you saw a hard market like this? So I'm thinking, to date myself, maybe 2001. 2001 was a pretty, extreme hard market that, I know that Kathleen and Andre were all involved with. I was too, to date all of us. And they were going beyond that. Someone was saying 1985. Now, I was alive, but was not practicing lawyer in 1985. But they were all pretty impressed with that comment. It was 1985. Some of my clients have been telling me they've been seeing increase in certain lines of 100%, which is really quite remarkable. You're hearing stories of other people raising capital to take advantage of the terms and conditions out there and the new rates. And you're seeing people raise capital because of how badly they've been hurt. It's just like 2001, where capital raisings are coming about because of the losses they've occurred and to help you write new business. So that is rare. I mean, yeah. You then think of some of the articles out there about what's our maximum loss capability from what's gone on so far this year. Upper range is 150 billion, lower range is 75 billion. But this is before the hurricane season. At a time where the Monte Carlo rendezvous would have been the most interesting rendezvous we've had for years, if not a decade. I know it's been canceled. This would have been the one year where everyone would have been very excited and passionate, because we're about to go into hurricanes. We've already had additional property damage and business interruptions with things going on the last couple of weeks, along with COVID, along with reduced investment returns and volatility there. What happens if we get 2 or 3 big hurricanes? A couple more landfall hits. Where do we stand in September? So if most people agreed that it was robust, that pricings were increasing for reinsurance deals, the terms were increased, that people were drawing the lines, then the hard market is just going to get stronger and stronger. So for my purposes, as a non-underwriter, it's definitely seems to be in a traditional hard market, which is only going to get harder and harder over the next 6 months.
Andre, obviously you have access to what investors are doing and thinking. how are investors thinking about the current market? Are they, do they see it as an opportunity? Do they think it's going to continue? Do they think it's enough for them for new capital to come in? What are you seeing?
Yes, so I mean, it's interesting, and first of all, good afternoon, everyone, and thanks to RIMS and BDA for inviting me today. So on top of wearing a collar shirt, I actually wore pants today, and surprisingly, they fit, which I was quite surprised. And in any case, let's go back to the market here. It's throughout the ages, I mean, reinsurance, and I don't have to tell you that, Kathleen, since, you and I sadly were in business in '95, contrary to Brad. And, it's a history of capacity, right? And I mean, it's the classic supply and demand. And what has been interesting is, we've had a couple of years, so forget about 2020, but prior to 2020, we've had a couple of years of big losses, which, some of them were expected, whether it's a typhoon or whether it's a hurricane. First surprise, I think, was certainly with the wildfires where, ILS investors started scratching their head and say, well, wait a second, how are you not modeling this specifically? How are you not pricing this specifically? And, there were already a bit of reticence there. And so more analysis was looked at. Obviously, climate change was a big topic, and you get a lot of ILS investors prior to the pandemics asking about, what is being done from a pricing perspective, from an exposure perspective as well. And then, last but not least, certainly on the ILS side, where you had a lot of trapping of collateral, which I think, didn't help in terms of expanding the capacity. So take all of that together, right? So even before the pandemic, let's look at the January 1 renewals. I think we started to see, the price of capacity being more expensive. So, January, we certainly started to see rate increases. And then, COVID happens, right? And so that in a particular, instance from an ILS perspective, I don't think it's impacted the ILS market the same way it's impacted, other lines of business, including casualty and business interruption and whatnot. I mean, we'll get some impact on the ILS side, but certainly to a much lesser extent. But what it has done is it has changed the price of capacity, right? And I think if you look at investors, so you mentioned investors, what we saw through that whole period of the last 2-3 months was very interesting, right? Because I've always contended, look, the next crisis, we're going to see capacity come into droves. For those of you who have heard me say that before, I've always said that. I've always believed it. Well, yes, but there was a little footnote that I didn't pay attention to. And the footnote was that, well, that's if the market doesn't melt down, which happened. And I think a lot of investors were like, yeah, that's great. The price of capacity has increased. Retro has certainly gone down. The retro availability has gone down. But you know what? We're too busy. We know it's a great opportunity, but we're too busy, sorting out what's going on with the rest of our investment portfolio. And so a couple of ILS platform, which we're looking to launch in spring, basically went to a screeching halt, and not because the proposition, the proposal wasn't great. It was. It's just that investors are like, look, we want to do this, but can we please press the pause button until the fall, and we'll get back to it. Which, in a way, if you think about it, that's a bit weird, because here we have this incredible market, right? Incredible opportunity. And so if you look from a property cat perspective, I would say the last time we had a market as hard as that was 2005, right? Post KRW is actually when we had a market. But what is going to be interesting, and I know I don't want to jump ahead of this, but what's interesting, I think, as a result of the pandemic is that, like 2001, it's affecting a lot of lines of business, not just property cat, right? And so we'll talk about what's going on later on. But I think from a pure ILS perspective, we've seen basically three reactions. The first one is those who were new entrants to the ILS market said, hold on a second, we still want to do it, but we want a little bit more time. You have those which were more opportunistic type investors in the ILS market, had redemptions, redeemed some of their money in those ILS funds, mostly because of liquidity needs. And probably, let's be realistic, there were some great opportunities if you were looking at distressed assets as well, right? And then the interesting one is, I think, those who are, the big long-term ILS investors, they actually, a few of them have actually increased their participation in the ILS market because they're familiar with the space, they know the territory, they understand the opportunity. And, again, I don't have to tell you this to Kathleen and Brad, but the complexion of ILS investors has changed over the years. And if you think nowadays, it's predominantly pension funds, right? Their investment in ILS is tiny. So if they were to redeem their money in ILS, I would be worried about the global financial market because it's such a small part. And I think that's what's saving us in a way is that persistency of capital. But it's an exciting market. And, from what we're seeing with the July renewals, it seems like July is also going to be, a pretty hard market. And again, renewals have been super late this year, but we're getting through it.
So let's stick to COVID-19 for a minute. So a couple questions. One, we always early on when the asset class was kind of growing, we always talked about, the benefit and the interest in ILS as an asset class was this non-correlating to the financial market aspect of it. Has this pandemic and sort of some of the things that are sort of circling around it, like, the political pressure potentially to cover losses, has any of that, from you guys' perspective, affected the way investors are thinking about the asset class generally, or is it literally it's operating exactly the way we expected it would operate? And maybe Brad, you want to speak first, and then we'll go back to Andre.
So I'm going to come back to that question quickly, Kathleen, add something to what Andre said earlier about the investments. I think we also saw people come out of ILS slightly just because the ratios and the investment policies were such that because the other investment values had gone down so much, they had to sell a bit of the ILS portfolio down or redeem because the ratios and the guidelines. So it wasn't a question they didn't like ILS or they didn't like the asset class. Because the devaluation of the other asset class was so bad, they had no choice to do it. The second comment I thought was a quick story, which would be interesting about the asset class is a client was saying to me when he's coming out there trying to raise new capital on the topic of startups, he said, and he was talking to a new investment banker, a new client, he said, listen, if you are a player in the insurance space and you invest in the insurance space, if you're not investing right now in this market, considering what the terms are and considering what's happening with rates, then you're not in this space. You're just not an ILS player. And so I think that all those people we talked about who've been on the sidelines waiting for good investment opportunities, like Andre mentioned a second ago, are literally chomping at the bit to jump back in because they see what's going on. Which goes back to your original question, and we'll try to answer it, which is, did the asset class perform as it should have performed, or has it somehow discouraged existing investors from what they thought was going to occur? And I think in this instance, it has performed on the whole as they expected. It has not discouraged people at all. I think it has come across as uncorrelated. Most of the articles in the paper have not been about how the ILS market is going to be somehow stung by COVID losses or COVID lawsuits or government intervention. Most of them have been talking about traditional reinsurers Whether that's going to happen or not, it's a separate issue, but they haven't been focusing on ILS. So I think this has been more of a proof of concept feeling in this space than trying to disprove it. And I'll give you a quick another story for later discussion. Several of my new clients thinking about forming new startups are forming new startups as a commercial reinsurer and also thinking about forming their own ILS platform at the same time. Now, if you think about that, in 2001, there wasn't much ILS. You just did a commercial reinsurer. We were all forming new class 4s, right? 2005, 2007, a bit of commercial reinsurers plus sidecars, right? Now they're saying, Brad, I'm going to form from the get-go an ILS platform and a commercial reinsurer. And I'm going to manage third-party risk, and I'm going to write the business on my balance sheet, which almost goes to your question that it shows it's uncorrelated, and people are not of the view that they're not going to struggle to raise capital.
Yeah,
Andre, do you have, yeah, go ahead.
I think on the COVID side, right? The short answer is no, it's not business as usual, right? I don't think any of us could have predicted, despite some of the pandemic bonds, cat bonds out there, I don't think any of us could have predicted, nor modeled, nor priced, right, the extent of that epidemic. And so, you look at, again, I like to put things in buckets because I'm an actuary and actuaries like buckets. So, let's look at the first bucket, which is, liberal interpretation of the pandemic, right? And so you look at the Supreme Court of Pennsylvania saying, oh, this is a natural catastrophe. And I'm like, really, people? So I think you're going to get a lot of attempt to political manipulation and legislative manipulation, which, eventually and hopefully and through the support of the market will be deemed unconstitutional. And so we don't have to deal with that bucket, right? Now, the bucket I think that's interesting is that, yes, it's true, COVID hasn't impacted the pure cat exposure, right? But the problem we have is that if it was just straight up natural perils, I would say you're right. But, ILS has expanded into retro, ILS writes quota share business, ILS writes all peril covers, and as we started, even with our clients, right, we started going through various reinsurance contracts, and you realize it's not as clear cut as people think it is. So from a valuation perspective, it's a bit of a headache, right? And unfortunately, despite me fighting for, gosh, at least 20 years that I hate, the follow the fortune clause, it's in pretty much all the reinsurance contracts. So guess what? You're just going to follow the fortune of the cedent. So I think that, from that standpoint, yes, if you've written a cat bond, chances are you're fine. But if you've written a quota share or retro or an all peril deal, I'm not so sure you're that fine. And so the question becomes then, what is going to be the true impact of the market? And, how are investors going to look at us and say, well, come on, guys, you can price the wildfire. I'm still not sure what you're doing with the climate change. Now we get this, what's going on? And so we have to address this, right? It's the elephant in the room, but we have to address this. Now, the third bucket, which worries me a little bit, actually worries me a lot. And because we've seen what happened on the June 1 renewals, is cedent just trapping the collateral just because, right? Just because they have no idea what's going to happen. Well, no idea what's going to happen is not a good reason enough, as you know, Kathleen, to trap collateral, right? And so we're actually starting to see, and at least emerging, right, some litigation risk there of people saying, well, you can't just trap collateral because you feel like it, right? There's contractual terms, and whether we're going to see more litigation around that, that remains to be seen. But it's something to think about. So
Yeah.
In summary, I think, has it impacted even the ILS business, aside from the positive side? I would say yes, right? Has it impacted the way investors look at our sector? Is just another check mark, right? And it's just another, or I should say, black mark rather than check mark. And it's like, okay, well, that's another thing we have to take into consideration. And
Yeah.
how disciplined is the market going to be, and how responsive is the market going to be? So it's
And like
not,
we always talk about, these kinds of events, this is where we mature. So terms and
absolutely.
conditions, a lot of these things now will get flushed out and talked about, and it will educate investors. So, and there'll be less things over time as we evolve that will be uncertain because we will have had the experience. So I think that's a positive. So that was great. How about if we move a little bit into, kind of closer to Bermuda and jurisdictionally? I think everybody who knows Bermuda knows that we've had tremendous growth on the ILS side over the last 10 years. The BSX stats are always quoted because they are pretty impressive. I mean, the BSX is, got about 80 plus now % of the total market cap that flows through the BSX, which is about 40 billion total market cap. Lots of transformer vehicles have been done in Bermuda, and everything that goes with that. So that's great, and I think we've done a great job. But we've got a lot of competition now, right? So there's quite a few jurisdictions that are looking at this business. They're trying to figure out how they can get the business. It's great to be the leader, but there's going to be people chasing us left, right, and center now. So with that, I thought I would start with Brad and maybe talk a little bit, because Brad, it's so great to talk to Brad about this, because Brad, really is at the forefront of new stuff that's going on in Bermuda. All the startups, he sees what people are thinking about, whether they actually happen or not, at least he sees it. So Brad, when you're talking to people that are looking at starting up a business, why do they come to Bermuda? What is the differentiator? If they actually do pick Bermuda, why is that?
First off, I just want to make sure everyone knows I did not pay Kathleen to compliment me just then, but clearly I owe her something for that. But let's break. I'm not actually going to be like Andre now. I'm breaking into buckets, right? So if we think of ILS and we think of cat bonds being plain vanilla cat bonds, sidecars, transformers. We start from the ILS side, and then we maybe go into larger rated V vehicles and things like that. Clearly, Bermuda over the last 8-9 years has become 80% or some large percentage of the marketplace. It's a large percentage of all cat bonds issued on Bermuda. And clearly, as you said, there's been more jurisdictions trying to compete with us, being Cayman, who was traditionally there beforehand, Ireland, London, obviously, and Singapore, I'm guessing, are the largest competitors. There are other ones out there too, but those are probably the largest competitors. I think when it comes to traditional cat bonds, yes, people don't mind using a new jurisdiction, but they also think, why should I change? It's very much worst case scenario, Bermuda has done nothing wrong, let's continue to use Bermuda. But let's think of what we've done right. Because we've done so many cat bonds in Bermuda, the system, the processes, the procedures, using the Horseshoe Re's and the Arctics of the world, it's pretty well tried and tested. It's pretty well smooth. It is pretty well quick and easy to get the cat bond from beginning to end. And as a result, most of the new innovation comes out of Bermuda. An example would be, I don't like this expression, but people use it, the first cat bond light. The very small cat bonds done for $20 million, $30 million, either public listings or private listings, were done in Bermuda and were structured in Bermuda when no one else did them. So as a result, we get the innovation. As a result, we know the processes. And it's also a real cat bond marketplace, meaning with self-fulfilling prophecy. The investors often in Bermuda. If they're not based in Bermuda, they have vehicles in Bermuda, right? So when you're a sponsor or investment banker traveling the world, assuming we get to travel in the future, and you're talking to investors in person, you often come into Bermuda to speak to the sponsor. And you also come into Bermuda to speak to the investors. Because so many of the largest ILS firms in the world are in Bermuda now. If you think of the top 5 largest ILS players, I think every single one of them has a presence in Bermuda, right? So business feeds business, I would say, right? And that just happens to grow like a snowball effect. And it all comes down to us changing our laws to become special purpose insurers originally, and slowly working away at other market leaders. That doesn't mean that we can be complacent. Obviously, other jurisdictions have copied us, which is only a compliment, but we can't sit there and take the compliment and pat ourselves on the back, because they're currently evolving and trying to do it better. And so that's a question for the service providers, the Bermuda Monetary Authority, to continue to make ourselves better. And we've seen that, because from there we go into the new classifications of collateralized insurers, which allows you more flexibility, allows you to use reinsurance, letter credits, guarantees, potentially offer clawbacks or top-ups out of different classes of insurers to make sure we meet market demand for investors or cedents who require that. So that is a new regime that Bermuda has come up with to help satisfy a new need in the marketplace prior to other jurisdictions. I think when you think of sidecars and transformers, they have traditionally been in Bermuda for years. I think cat bonds is what we were missing, all right? And they've been here because, again, a lot of those sponsors are Bermudian companies.
Right.
I'm going to stop there just for a second.
Yeah.
Andre wants to jump in before I carry on talking and hopping
Yeah, and I
around.
think it's important to hear from Andre because, Horseshoe and Artex as well are, in multiple jurisdictions. So as Andre always points out, although, I think he enjoys being in Bermuda, he is in all these other jurisdictions. So maybe give us your perspective, Andre, on why Bermuda and maybe why, how we need to stay, what we need to do to stay relevant.
Yeah, sure. I mean, look, there's no doubt that from an ILS perspective, Bermuda is by far the largest, ILS domicile, and the others are completely, way behind. Even number 2 is way behind. But you have jurisdictions like Cayman, like Guernsey. Now you have the UK. Obviously, you have Singapore. Other jurisdictions are looking to set up as well. But the one thing Bermuda has going for it, except aside from the appropriate regulation from a special purpose perspective, it's a market, right? It's a reinsurance market. We have real companies here. We have real people. It's obviously sophisticated infrastructure, etc. But and that's why I always say the only close competitor theoretically, because it's certainly not the second largest domicile, but the only true competitor would be London, right? And probably one of the things that prevents London from expanding is the regulatory framework, right? Is the regulator, which, as we know, Bermuda's regulator has been, throughout the years, has been a huge part of our development as a jurisdiction by being, sensible, responsive, certainly transparent in terms of communicating and working with the market. I mean, look at, when you look at the ILS working group we have as an industry, basically being the advocate of the ILS industry to regulators and other constituents, it just makes us a stronger market. Sure, you're going to have markets like Singapore, which, in my opinion, are more buying market share rather than actually attracting people for any particular reason, right? But for sure, if you're going to be funding, expenses of a transaction, gosh, if I'm a sponsor, I was joking about a couple of Florida insurer doing their cat bond in Singapore, and I'm like, and of course, Singapore is so much closer to Florida than Bermuda is, right? So it makes sense that they go to Singapore. I'm being sarcastic, as you know, Kathleen. But, you know, and so, I mean, look, we are going to continue to grow Bermuda, and I think there's room for everybody, right? And you guys know a bit my sense of that, where when London started having an ILS regime, people were like, oh my God, you know, London's having an ILS regime. And to me, it's exciting because it's just bringing different entry points. You know, some people are comfortable with Cayman. I mean, you look at some South Florida companies, you know, they're right there. They figure there's direct flight from Tampa and from Miami, and they like Cayman. So sometimes, I remember one client way back, and they're like, oh, well, we've been on vacation in Cayman. We're going to do our company in Cayman. I'm like, fantastic. This is a great reason why you want to have a company there. So I think you have the emotional side, but rationally, I mean, let's face it, if you look at Bermuda as a whole, is the right market to do an ILS transaction. You know, as Brad mentioned, in terms of even the newcomers, right, the new startups are looking at Bermuda, and they're not looking anywhere else. I mean, aside from our Solvency II equivalency for the commercial reinsurer, which I'm not going to talk about, I think the fact is, you know, it's not going to get smaller. Yeah, sure, you know, some jurisdiction may jump at the bits of some of our business, and we've seen some cat bonds move from Bermuda to Singapore. But you know, what happens when Singapore stops financing the you know, the deal costs?
Right.
And so you know, I still, not only do I like to live here, by the way, I still think it's, you know, 25 years later, I think it's a pretty good jurisdiction to be in.
Brad, anything else you want to mention there? And how much has Solvency II really played into the startup side from your perspective on the commercial side? Actually, I'm curious, especially now with Brexit.
Right, great segue. So I agree with everything that Andre says. Not surprising. I think
That's very surprising.
It's not surprising. I mean, complimentary today. Diplomacy is not as rare for Brad, I know. So I think another reason to add on to Andre is saying is that we are the innovators. You know, we traditionally came up with special purpose insurers. We took a special purpose insurer to write cat bonds and made it basically a commercial reinsurer to write multiple transactions. The first cat bond light was done in Bermuda, but also the first rated re ILS platform in Solvency II was done in Bermuda. And as a result, what happens is most clients see the next new innovation, and they want to think, well, they did that there, or in this case in Bermuda, I need to do it in Bermuda. So, and the latest flavor at the moment is the ILS player who's writing it off the commercial balance sheet out of a Solvency II rated vehicle. The first ones were done in Bermuda, and several more have come out of that. And that just shows again that Bermuda, being the market leader, helps attract additional business. And then they create more business out of that. So that innovation of constantly evolving, of constantly trying to move ahead of everyone else, mainly because we have the people in Bermuda doing the deals, mainly because we have the staff in Bermuda doing the deals, mainly because the investment bankers, our investors are here, helps grow the pie.
Yeah.
And it constantly means we cannot sit still. This is probably the longest it's sat still for a while, sitting in front of this webinar, but I mean, we can't sit still here because we got to keep going and evolving, Andre and I. Otherwise, we won't win the business and someone else will take our lunch.
So
Andre
how,
likes to share.
yeah.
I do not like to share. Right?
Yep.
So
The one thing I would say, Brad, that we have to keep in mind is, you know, even if we don't stand still, there's some jurisdictions that, you know, are in a better time zones than we are.
Sure.
You know, if you look at Guernsey or at London, you know, if you're a European ILS investor, you know, maybe they're a better, you know, a better jurisdiction for you. And as we all know, even in Bermuda, the SPIs are not Solvency II equivalent, right? So I think we have to be conscious of that. So, you know, we're not going to get 100% of the market share, and that's okay.
Right. Yeah.
But I think our market position is still pretty strong.
Right.
So since we're doing this for RIMS, let's talk a little bit about, a risk manager's perspective on ILS. If I'm a risk manager, first of all, why should I think about ILS? Why should I care? And, can we talk maybe a little bit about some ways and forms that corporations, are accessing this kind of capital directly? Let's talk a little bit about ILS from a risk management perspective, if we can. And let's have Andre, maybe you could start us out there.
Yeah, and I'm just, I'm just warm, as you know, from a 5 a.m. Conference to European captives and corporates. So I'm just going to repeat myself. Look, it's funny. About a few months ago, I had a journalist asking me, you've been in the ILS business for 15 plus years. What has been your biggest disappointment? And I was surprised. I thought it was a great question. And my biggest disappointment is that we haven't had corporates use ILS as much as I thought they would, right? If you go back to when Tokyo Disney, right, did concentric re, which was that cat bond, parametric cat bond with like bands around Tokyo, and it would pay out depending on the intensity of the earthquake. And I was like, fantastic, we're on our way, right? And then you had a super long hiatus, and then, the MTA, the Metro Transit Authority, came back and started doing MetroCat. And you're like, okay, that's great. And then Amtrak came back. Amtrak also did a similar cat bond structure. And to me, I think part of the reason, and I had to think back, right, whether it's captives or whether it's corporates. And I think part of the reason why they haven't done it, there's this sort of mysticism around ILS. It's like when people talk about Lloyd's and you go, ooh, Lloyd's, I have no idea what that is. So as a result, I'm not going to use Lloyd's. Well, same thing with ILS. And so I think we have a job collectively to do, and that's sort of what I did this morning, is to educate, corporates as to what that ILS does, how it can help them, especially when there's a shortage of capacity. But also, so part of it is education, demystification. But part of that education is telling them also that ILS is not all things to all people, right? I mean, it is going to look at larger limit. It's going to look at larger rate online. It's typically one-shot deals. There's this preconceived notion that ILS is naive capacity. We know ILS is not naive capacity, right? So I think there's, and then there's the whole collateralization and the collateral release. So, that's why when, one of the large hotel group called me last year, actually, or was that 2 years ago, and they wanted to do ILS for their Caribbean exposure. And I said, fantastic. And, but their rate on mine was like 2%, right? And they had 3 reinstatement for that rate online. And they're like, well, what should we do? I said, stay with your reinsurer. That's what you should do, because, it's not, and I think so. I think if you look at, the way corporates have used ILS, but it's more than just property cat, right? Look at the perils that are now entering ILS, cyber being a big one. And I mean, which large corporate doesn't have cyber exposure, right? And it doesn't have to be done on an indemnity basis. It could be done on a parametric basis, right? We've seen the guys at, New Paradigms, for example, which have, when they first came to me and said, we want to do index for like, hotels and condo owners in Florida. And I'm thinking, ooh, whatever you're smoking is not legal in Bermuda. And then look, they've been pretty successful, right? So I think we just need to educate them, and we need to, there's plenty of opportunities, but it's not a one size.
Right.
It's not a one size fit all.
Brad, you want to comment there quickly, or?
Yeah, I just think that I totally agree with what Andre said, but I also think that we've seen a couple of players in the ILS space who are corporates, not many, right? So you've seen a couple of cat bonds, I'm going to say maybe 1 or 2 a year, if that. who have accessed the cat bond market. So it's increased, so it's growing, but I don't think it's yet to the scale to really infiltrate corporate risk managers directly. But I wouldn't be surprised if it increases a bit more over the next couple of years.
Okay. Okay, so let's just take a futuristic view quickly before we wrap up and take some Q&A from the audience. You know, maybe let's talk a little bit about trends that we might be seeing. We talked about cyber. Let's talk a little bit about that. I'd like to hear from both of you what you're seeing on the startup side. Is there new trends? Are there new things that we're seeing in Bermuda? Is casualty gaining any traction? So I'll stop there, and maybe let's start with Brad. Give us a view on trends and future, and then we'll go to Andre and we'll wrap up.
All right, so you can call me Mr. Positivity, because I think you're going to see new startups. No question. I don't think the startups are going to look like 2001 startups. So in 2001, we had 8 new class 4 insurers, anywhere between $1 billion and 1.8 was roughly the sizes. And they wrote all lines, right? They didn't do any specialty lines. They basically wrote all lines. I think this time around, you're going to see them a bit smaller than that. I think they might write 1 or 2 lines, but they won't be just general lines, is my point. I think they're also going to come with probably an ILS platform. At least a couple of them will come with an ILS platform, which I think is also going to be different. So I think they're going to be a bit smaller, a bit more monoline, and with an ILS platform from day one, which shows back to Andre's point of being horses for courses. Some of the clients will take the ILS portion of the business. Some of it will be written off commercial paper. I think you're going to see that. I don't think the increase of capital in the startups is going to be moving the needle in the hard market. I think we're going to see the market get harder and harder throughout the year. The new players often are followers to the changes, not the makers of the changes. So as a result, they'll be happy to get on the lines and follow the pricing and the previous terms that have been dictated by the more seasoned commercial reinsurers. And I wouldn't be surprised if you see the hard market continue into next year. With everything else going on, especially if you throw on, you know, a couple more hurricanes this year, maybe a second wave of COVID. There's other things that have happened which haven't quite trickled into the system yet. I think it's for the insurance space and reinsurance space, we're going to be talking about this as a change in the culture and how we do business, no question.
Andre, what are you seeing? What are you thinking?
Well, I mean, so let's start with startups, right? I think we've seen, and you know, we're working with a couple of them, and one of them not being announced yet, but you know, they're all going to be between $500 million and $1 billion, right? So we're not talking small startups there. And interestingly enough, I think pretty much all of them have chosen Bermuda as the domicile, which is very interesting for us as a jurisdiction, that is, and they're going to ride across the board. But you know, from an ILS perspective, if you look at innovations, certainly we're starting to see more and more perils, you know, entering the space. I mentioned cyber. You know, obviously there's been mortgage. You know, mortgage has been a big user of ILS at the moment. We've seen some contingency cover, including lottery deals. And you know, there's a bit of dabbling on things, and I'm ignoring the life side, because obviously on the life side you have extreme mortality and pandemics, unfortunately, and for some pension fund there's longevity risk being passed on, but that's on the life side. On the P&C side, you know, casualty, as we all know, is the holy grail, but it's tough, right? Just because it's a longer tail cover and collateral's being trapped a little longer. But there's people thinking about it, right? In terms of how do they chop the tail, and how are they able to make some sort of commutation. We're even starting to see adverse development cover going into, you know, starting to look at ILS. So it's in evolution, as with every market, predominantly still property cat, but I think we can't stand still, right? We got to continue working on that. So that's what keeps me excited and motivated. It's fun.
So we went a little bit long. I do want to leave some time for questions. Jasmine, have we got some questions from our participants?
We have a few. I actually have a question. So Brad, you talked about the new startups and how you have commercial insurers now coming from the get-go having ILS platforms. And then, you know, Andre, you talked about your biggest disappointment being that corporates haven't been using ILS. Do you think that that emergence of both of them coming from the get-go with a commercial insurer having an ILS platform from the beginning, that will result in more corporates using ILS?
That's a good question. I think.
Go ahead. Go ahead, Brad.
Yeah, I think that if the new ILS platforms do that wonderful expression cat bond lights, where you do smaller collateralized vehicles, smaller bonds, smaller notes, then potentially yes. It might make it more efficient for them and more innovative. I think if you link those cat bond lights to some of the internet platforms coming around the corner to again save costs and make them more efficient, that might help drive the smaller programs, and as a result help corporates. But I think to me it's the cost and the size and efficiency will help attract corporate members more.
You know, I think Jasmine's point, I guess the angle was that, well, hey, if you're going to write insurance, right, why don't you extend that to your ILS platform? But, you know, my sense is those ILS platforms are really formed to manage third-party capital, right? I don't think they're formed to change the world. And until such time corporates themselves drive, you know, the process. And you know, let's be honest. Sometimes it's the broker of the corporate which, you know, doesn't want it to go to the ILS market, and they'll push it to the traditional market. So you know, we have to be honest and call it as it is. But you know, with education, with exposure, that's really what I think is going to change.
Yeah, and I think Brad kind of hinted at it. You know, there's going to be, you know, technology is going to drive some of this as well. So if, you know, the trading platforms that are sort of propping up, if that starts to get more widely adopted, you might actually see corporates using those platforms to access that capital directly. But, you know, it's early days.
Very good point. And I think that, you know, the weather derivative, I know we haven't talked about climate derivatives, but I think to me, that's probably one of the low-hanging fruit in terms of corporate using ILS, you know, anything that has to do with climate derivatives, because it's simple, it's parametric, and it's, you know, and they understand what's going on there.
Yeah, and to your point earlier around cyber, you know, where capital markets gets interesting is when you need big limits, right? So if we really do start to cover cyber the way we should, like cloud exposure, you know, they're gonna need capital markets. And so there could be an instance where we see some, you know, forms of coverage that are coming directly to capital markets. So yeah, I think it's gonna be interesting. Anything else, Jasmine, over your way?
So you touched on a bit of innovation, Kathleen, and you talked a bit about how, you know, the use of trading platforms. I mean, what are your views on trading platforms and that are trying to, you know, gain the adoption?
Does anybody else want to pick that up?
Sure.
Andre or Brad, yeah.
I think that's an example of Bermuda being innovative, right? If you think of the new electronic trading platforms coming out, traditionally they've come from Bermuda over the years. The BMA has obviously come up with new licenses to help smaller trading platforms get to the market with less costs, less frictional costs, to help encourage them to come to Bermuda. I definitely think it's going to be the future of the market, and you've seen them in the Acanovas of the world and people like that being licensed. I think we always hear about in the marketplace the cost of doing business in the insurance space, and how much every dollar premium goes from frictional costs, and how it needs to get reduced down to a small amount. And to do that, technology and that innovation has to play a part to make it more efficient. We're not talking about squeezing out brokers or something like that. We're talking about keeping everyone playing in the marketplace, but growing the pie because it becomes cheaper to do business because there's less frictional costs, which only helps the cedents more and help the reinsurers and everyone in the food chain. If we can actually.
And I think it's a great example of where Bermuda shines in terms of innovation, because you mentioned Akinova, which is one of the few platforms that have been formed. And obviously, we've had Tremor, we've had a couple of them. Akinova, for example, is operating within the sandbox, that technology sandbox, which again, I think it's an innovation from a regulatory perspective, where you're allowing people to set up quickly within a lighter touch regime, and eventually evolve into a more regulated platform. Not that they're not regulated; they're regulated, heavier regulated. But again, with electronic platform, it's been tried before. It's not a new thing, right? So for those of us like Kathleen and I, we've been in the business for a long time. It's been done before, and I think where part of the success, and Brad touched on that briefly, is how do you not alienate the brokers, right? And I think at the end of the day, people forget that a lot of the time the broker controls the business. And so, if it's a platform that integrates and involves the brokers, at least for now, right, it will have a good chance of success. That's my testimony.
The last comment I would make on the innovation, I think the space to watch now is going to be, Bermuda and companies coming in really leveraging the digital asset framework that Bermuda has come up with to really impact the cat bond space. So if you think about having, a more liquid, larger digital capital base for cyber, for example, might get very interesting for Bermuda. And then also bringing the cost down. So if we digitize all of that, a digital, transformer vehicle, a digital asset on the back end, digital representation of collateral, if we do all of that, hopefully over time that's going to bring the cost down, but it's also going to hopefully open up the market for Bermuda. So I think that's going to be another space to watch, which Bermuda is going to have a huge advantage in.
We have a couple of more, but I'm going to just, throw out one last question, and it's a bit general. But Brad, you mentioned you think the hard market will last to next year. Queries about, do you think the hard market will continue past that?
I love how you pick on me as the non-underwriter in the room. That's okay. I actually do think it's going to last longer, more like a traditional hard market. Definitely beyond January, because I just think there's more to come out of the system, and we're only halfway through the year. So I think people are going to be learning how we deal with this pandemic and learning with the losses and what the impact is for a while. And I think what's going to happen is we learn more, it's going to affect the terms and the rates.
Agreed.
You're hearing people withdrawing today. Today, people are talking about no longer writing retro or withdrawing lines, bring lines back. So I think every time you hear about people bringing back lines or increase of rates or hardening of terms, that just increases prices, because then everyone who wants to buy protection can't find that protection or can't find the protection on their terms. So for my purposes, I'm a betting man. If you ask me that question this time next year, would we be in traditional hard market? I would say yes, unequivocally.
Any views from Kathleen or Andre?
Go ahead, Andre.
Well, the good thing is this session is recorded, so I want to have that recording from Brad next year and see if it got to be true.
Thank you.
It's hard to tell. Honestly, the answer is I don't know. Because again, it's a seesaw thing, right? It's about capacity and it's about perception of risk. And as was mentioned previously by both Kathleen and Brad, if we have an active hurricane season on top of everything else, just to make 2020 a complete write-off, we'd have an active hurricane season. I just can't imagine what would happen. I can't imagine. Kathleen, you have a view?
No, completely agree. Yep. And I think that's again, you don't know. So that's why you see these equity raises right now. You know, RenRe raised a bunch of money, and because they want to be ready in the event that that happens, right? So a lot of these traditional players will be at the ready to deploy capital if capital gets trapped for investors. So it's going to be, I think it's going to be a very, very interesting wind season to watch for sure.
I just think I need to tease my panelists, you know, make me go first and answer the question. And the most wishy-washy answers and responses came from the people as the underwriters. I just want to say that was poor form.
Right.
This was poor form. Andre's laughing because he knows. Poor form.
That's why we picked you, Brad, because I knew you'd say something direct.
I'm staying by my words. This time next year,
talk to my lawyer. Let me talk to my lawyer.
Exactly.
He's not going to let us forget it either, Andre, if he's actually right, you know?
You had a chance.
Oh gosh, thank you so much. We do have a couple of more, but I think, you know, for the sake of time, we're going to wrap it up. I just want to thank you, Kathleen, thank you, Brad, and thank you, Andre. This has been a very educational and insightful conversation. And I know myself and all of the listeners really appreciate your insight and your years of expertise in sharing that. So on behalf of the jurisdiction, so thank you, I appreciate you. For all of our listeners, thank you for tuning in. I hope you would tune in next week for our 4th installment of the RIMS Bermuda webinar series. If you have any queries, please visit our website at thebda.bm. All of our information is on the site, and you can contact myself to get any additional information about doing business in Bermuda. On that note, thank you. And Justin, I'll let you take it away.
Thanks again, Jasmine. A copy of this webinar will be archived on Risk Knowledge and Opus Ed within a few business days or a business week. The RIMS Bermuda 2020 series continues June 24th at 12 p.m. Eastern with the session Captives in the Current Market. Visit rims.org to register for that session and the final session. We look forward to seeing you next Wednesday and July 1st. Thank you all and stay safe.